Hi everyone, hope you're doing well. This is Vinny with a market update. So tomorrow we have an FOMC announcement at 2 p.m. Eastern. The question on everyone's minds is, will the Federal Reserve finally taper down on its QE3 program? As you may know, the QE3 program, what they're doing is they're buying bond purchases in the amount of $85 billion a month in order to so-called stimulate the economy. Now, the moment they reduce the amount, or if they get rid of it as a whole, which I personally think they're just going to reduce the amount. But whatever they do, if they do one of those two things, you'll see S&Ps finally take that correction that it really needs. You'll see stock markets just go down, and you'll see gold and silver go down, continue its downward trend, and you'll see the US dollar go up. So we have 5 FOMC announcements left. They are on June 19th, which is tomorrow, July 31st, September 18th, October 30th, and December 18th. Now, the market is expecting the Federal Reserve to taper down on the QE program around September, October time, which will be September 18th and October 30th. However, it's very possible that the Federal Reserve could taper it before then. It could be tomorrow, or it could be July 31st. So we just have to see what they say. Again, 2 p.m. Eastern time, and you'll see Bernanke speak at 2:30 p.m. Eastern. So I want to share with you a strategy that my mentor taught me how to trade the FOMC announcement. So it comes in 3 waves. The first wave, so let's say hypothetically if the FOMC decided to taper down on the QE3, so the market would obviously go down on that news. And then what would happen is that it would go, the second wave, it will go up, which is the fake move. And then it would continue going down, and the third wave will be a continuation of the first wave. Okay, and where my mentor would get short, what he taught me is to get short in this region right here. So if there's something negative that the market doesn't like, it'll have the first sell-off, which is the correct one. It'll have the fake move to the upside. Once it starts going down again, he'll then short because that's confirmation. He'll probably get rid of half of his position in this region, and then as it keeps going down, he'll just take out profits, and he'll probably leave 1/4 of his position and see where that takes him. So that's the 3-wave pattern, and that's what he taught me. So I wanted to share that with you. And also what I want to show you is a website called Econoday. You can go to econoday.com, and what that will show you is critical news and other news that will come out that may or may not impact markets that you might want to know. The only things that you need to concern yourself with are the red stars and the yellow ones. Yellow ones will have somewhat impact on the market. The red ones will be having a huge impact on the market. And today we saw CPI numbers and housing data come out 1 hour before the market opens. Now that reminds me of something I heard about a year or so ago, where you had people having their theories saying that, well, you know, gold always goes up when Europe's open, but as soon as the US market opens, it just takes a big whack and it gets manipulated down. Well, what they don't realize is if there's critical information before the market opens, such as in this case CPI and housing data, and if it's negative for the market, then stocks will go down and gold and silver will go down with it. So something to keep in mind, especially if you're trading overnight, or if you live in Europe and you want to trade the US markets, you really need to be cognizant of critical news, okay, especially before the US market opens if you're trying to trade the US market. Okay, so I'm going to move now into gold. So today it had a decent move. It finally got out of this triangular wedge pattern. Now, my previous gold update, I told you that I saw another small triangular pennant flag pattern here, and a flag pattern, and I told you to expect it to go down either that Friday or early next week, and it went down Friday, so that was a good thing. The 21-day moving average, the yellow line that you see, it's holding really good support, so gold's going down, which is good. The only thing that's a little bit concerning is gold is taking a very long time to snap out of this consolidation. It really needs to hit these lows, and it's taking its time. We've got 2 more weeks left. We've got this week and next week. Let's see what happens there. Now, the reason why that's important, because gold is in a monthly volatility squeeze, and so we need gold to continue going down further and further down. The moment it doesn't, that's when there's a question mark as to whether the bottom is in or not. Let me give you an example. Before the crash, before gold crashed, was in a volatility squeeze right here. So it was just consolidating. Now it showed upward momentum, so some people may have gone long, and when the momentum tapered off, it started going down. Okay, so I'm looking for something like this to call the bottom in gold. So let me go into the monthly chart and show you. So these bars that you see here, we need it to continually go down and down and down. The red dot, remember, it means a squeeze. The green dot means it's finally fired off. So we need the squeeze fire to continue going down and down. Okay, the moment it stabilizes and then it starts going up, that's when it's a possible bottom. So I'll be discussing the bottom in gold in another video, but I wanted to definitely bring this to your attention, that every single month, especially from now until August or now until September, we really need to see gold go lower and lower and lower. And the moment it doesn't, that's when we have that question mark as to whether the bottom is in or not. So expect some kind of a move to the downside further this week or next week. It should take out the 1321, and let's see if it finally goes to the $1,200 level territory, maybe high 1200s. Let's see what happens. And again, FOMC is tomorrow, June 19th, 2 p.m. Eastern, and let's see what Ben Bernanke has to say about the QE3. Alright, so that's all I have. Hope you have a great day. I'll see you on the next video. Thanks.